Hello everyone, this is Eth Usd from Forex Trading Unlocked, and we are here on Tuesday, September 21st for a Forex trading and crypto trading analysis for you for the rest of the week. And before we get into that, we just want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. Oops, excuse me, sorry, that disclaimer. Jumping around really fast. There, they got it up. Okay, that's our disclaimer. Check that out. Now let's go to our reminder that if you have not done so already, please subscribe to our YouTube and Twitch channel, Forex Trading Unlocked, and also like and share our videos with your friends in the Forex and cryptocurrency trading communities. And while you're at it, check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, written by yours truly. And now there's an option on Amazon to make hardcovers, which we are going to update the book and have that available as soon as possible. All right, now let's get to what you are here for. We have the Forex-Trading-Unlocked.com website pulled up from our navigation tab. We've already pulled up the workstation page, and we're going to toggle down past the numbers. Forget the numbers. We're only talking about technicals today. The dollar index, as you can see, spiked high yesterday and is a little bit under pressure this morning. We're going to take a look and see what's driving it. We have a mixed bag of goods between how the dollar is reacting versus various currencies. All right, so we're going to start out with the Euro US dollar. The biggest component in the dollar index, as you can see, is slightly higher, but the range is not very big today. I want you to notice how this is, the trading the last 2 days. Now, we're heading into a Fed meeting in the U.S. Odds are very slight that they're going to raise interest rates. That we know is not happening. We know we have a lot of issues geopolitically with what's going on with the Chinese real estate company and the debt markets. And if you think the debt markets don't mean anything on currencies, well, you're definitely oblivious, because interest rates are a function of currency pricing. And with those potentially in play, we are looking at some crazy stuff coming out. So we will start to take a look at it right now and see what's going on. All right, so let us pull up. All right, we're also going to pull up another copy of our website. We're going to go down to futures, and I want to show you something real quick, because this has to deal with what's going on with the currency markets. Yesterday, as you know, the currencies, the US dollar took a beating yesterday. We had this news about the China creeping in. Look at what happened with the bond futures yesterday. These bond futures escalated huge. They had a low of 162.19 and a high of 164.06. I know you're probably wondering, why is Teddy talking about bond futures? Well, I'll tell you why. Once again, interest rates are a function of currency pricing. Okay, so this is a very big thing you need to pay attention to and you need to understand. When interest rates are going, or when bond prices and 10-year prices are going up, that means that interest rates are going down. When interest rates are going down, the value of the dollar is it goes down, because interest rates, as they go up, the dollar is worth more. As the interest rates go down, the dollar is worth less. So, since we've had that little bounce in the interest rate markets, that accounts for this little bounce that we have in the Euro US dollar. The question is, are we going to continue this? I think what you have is a knee-jerk reaction. We had an overzealous trade yesterday. Be very cautious. I think that as we move throughout today's trading day, it's going to be very tight. As we look at some of these other currencies, you'll be like, oh, wait, they had huge volume and huge volatility yesterday, and even today, but it's tight here. Remember, the biggest currencies are barely moving right now in front of our Fed day. So what does that mean? It means until 1:15 tomorrow, I would expect a choppy grind of a trade. If you're not already in a position, if you don't have a valid buy or sell signal, regardless of the currency cross, it is probably advisable to wait until after 1:15 Chicago time tomorrow for the Fed meeting to be over. If the markets start to swing around and get crazy, stay out of it until Thursday morning. Remember that there's a lot of noise. The algos could start spiking around and start going crazy. All right, so let's see. We came off a lower move low, and then look at this. This high that we had here was a high of 119.09, and here we have a 119.087. we've made a higher move high after this low down here of less than a pip. It's a fraction of a pip. But by definition, we have established a neutral trade. When you look at this low here on a Fibonacci basis, we blew through everything as far as support. So are we in a choppy grind here? Are we going to go higher? Are we going to go lower? Well, I guess what we really have to look at is this neckline here. We need to get above here. This is the breakout level to confirm solid strength in the EU and the Euro US dollar currency cross. Odds are we're going to be fishing around the next 2 days. As you can see, this market's been in a tight range from, let's see, we fell down into this area of around 119. This was on June 17th. So since June 17th, we've had a high of 1974 and a low of 1666. That's a $3 range in a market that's been having $3 range days this year. So I think we've consolidated here. The question is do we have the ability to break out to the upside, or are we going to fall back on support? Well, I think we're going to find out relatively soon. If we fail from Monday's low here, we'll be leaning on support pretty hard. And that has us looking to test this low of back in August. Now, this is key support here. If the dollar can fall through this $16.97 and penetrate new lows, is it going to be a harsh sell-off like this little area here? Most likely not. What you're probably going to see is over the next week or two into October, a grinding failure like this. Interestingly enough, we're going to have to watch the equities. We have this China thing is going to leak into all the markets. It seems that it's not a matter of if and how. It's just a matter of when this starts to really shake things up. We have the already ripple effects beginning. If these things follow through to fruition with China and the default and the bankruptcies and stuff, we will have tremendous volatility. It's going to shake up the interest rate markets for sure. The debt markets will be all over the place, and that's why we started this webinar today speaking of the Euro US dollar and the other currencies and why interest rates matter. When they start to swing, the currencies are going to swing. It's also going to be a big reflection of what happens with the S&P 500, the NASDAQ, the Dow. All of the stock index markets around the world could potentially get rocked. Here's another situation. We're coming into October, the anniversary of when we have typically large sell-offs in U.S. equity markets. It's a cyclical thing, and we have the perfect storm for a accelerated sell-off in the equity markets in October and into November. When those markets start to trend conversely to remember, they're in a major bull trend that has been going on for a while. Short term, they're in a bear market just over the past few days, week and a half, but that could change on a dime. We know that the markets rally and they've been making new highs like crazy for the past few years. We may be now in the beginning stages of what will be our first bear market in the equities in years. And that's just saying like a few years. We're talking about decades. We have not had a true bear market in the equities in the U.S. or globally since 2008. Well, between 2006 and 2008, depending on which markets you're talking about. And then we did. Those were bear markets. They were not just corrections. What we had in 2020 was a V-shaped dip brought on by the closures from the pandemic and everything else. That was nothing compared to what we're looking at now. We could see the lows of 2020. Now, is it going to fall off the map like it did last year with the pandemic? Well, the fact that the numbers for COVID are 5 times what they were back then, that right there should tell you something. That is a big deal as far as where we are today. Remember that if we now have vaccines where half the world at least has been vaccinated in most industrialized countries and even higher in many, In the U.S., we've reached now over 200 and some million people for sure that have been vaccinated, but we have 3 to 5 times the COVID infection rates throughout multiple states throughout the country. And it's not necessarily where they have more vaccinations or not. It's just in some of the biggest areas where we definitely have the highest concentration of vaccinated people, we have 3 to upwards of 5 times the infection rate that we did last year. So not get into any more of that. Those numbers don't make any sense. So we're not going to dwell on that. But those, if what happened last year was the right thing to do, well, then we're going to go into full lockdowns everywhere all across the globe very, very soon. And if we're not, well, then it becomes a counterintuitive action to the narrative. So who's going to win, the narrative on COVID-19 or the reality that we have to live life and deal with what's going on? Because right now people are avoiding what is going on in the world, and the markets don't avoid that. All right, so where's our trade? Right now we're waiting for a signal. This correction to the downside has run its course. We need a bounce. We don't have a buy signal. This is setting a higher move low after a higher move high. Like I said, it's in less than a pip. But if by definition we are neutral, starting to potentially set up a bullish breakout to the upside, we'll see. So right now I think if you are an aggressive bull, you could risk the low from back here at 116.66-ish area. Anything below here, you don't need it, you're wrong. So right now we're trading at 117.31. You have a risk of less than, a little more than 80, 70 some pips for a move that you're looking to challenge $1.19. So as far as your reward to risk ratio, if you're an aggressive bull now buying against yesterday's low and the low from back at the end of August, is a good play. If you're bullish, looking for a nice snap back to the upside. If you're a bear, I'd be very cautious selling into these lows right now. It looks like we're trying to chop around. We may have more of this just kind of swinging up and down and around in this range here. So range traders have been doing well for the past couple months. Trend traders have been getting eaten alive in the euro US dollar. Let's go to the British pound US dollar now. This one is also in a similar situation. However, this one has a buy signal shaping. All right, now when I say shaping, it means it has not happened yet. So what can you see from this versus the euro? This one's been going pretty neutral for the summer as well. However, it came off a situation of making a higher move high, a true higher move high, and a higher move low before the euro US dollar did. Then it came back up and made this lower move high. Now we're making a higher move low. So the question is, did this correction end here and set us up for just big neutral chop, or are we basing and getting ready for a big rally in the pound US dollar? So this is a situation for you aggressive bulls, and I would use caution with this one just because the oil trade is on the table right now again. If we start to go into lockdowns and et cetera, and oil actually gets a sell-off because of that, that would be something where the British pound US dollar may actually start to continue to bang new lows. But that doesn't seem to be the case right now, and we want to go with the optimistic possibility that we're not going to have lockdowns like we had last year, and that even if we have economic issues, which we know we're feeling the ripple effects of the pandemic and what it's done to economies in the world, maybe we can still grind through it. If that's the case, we have a very low risk buying opportunity setting up. So as of the close today, once it starts trading for Wednesday, even though we are in front of a Fed meeting, I'm going to give you a little option here. Take a look at the close today. If this chart on the daily looks like this right now is called a Harami buy. That is a short-term pause in direction and usually a short-term buy signal. It's not that strong, but it is a good medium term, and it definitely gives you the signal to look for tomorrow's trade, tomorrow being the Fed day. So let's just say, hypothetically, for all you aggressive bulls right now, if you want to get long the market and use your risk of the not this last swing low, but the low back here set in July. Anything below $1.3572, you're on the wrong side if you're long. But if this market is at least staying neutral, getting ready to challenge resistance, or getting ready to set a new trend higher, you're looking at one of your best last buy points coming up today. So let's say this settles just slightly positive where it's at here, or maybe even a little higher. That would be your Harami buy signal. If it's followed through tomorrow by another positive day that settles slightly higher or even extremely higher, then that would be called a 3 inside up pattern. Both of these you can learn about in the book High Probable Japanese Candlestick Patterns, written by myself. And the 3 inside up is one of my favorite buy signals. It's very, very consistent. It's why it's a high probable Japanese candlestick pattern. In which case that would have us setting up for a challenge of $1.3915. So if you look at the market here, it's at $1.3660. Let's say you get in anywhere around this area to $1.37 between today's close. Don't do it now, because for all we know, this market could go negative and be making new lows before the close, in which case this signal would not be occurring. It needs to look like it does now, or similar to this, being positive for it to be a valid signal. So remember that. Nothing until the close is today, so you got to wait until what is it? Roll over. We're on the fall schedule flipped. So yeah, we're right at 6 o'clock, 6:30 Central Standard Time, depending on your platform. Some of them roll already at 5 o'clock. So somewhere between 5 and 6:30, look for that market to have closed, rolled into Wednesday's trade. Remember, you have a Fed meeting. All kinds of algos could shape up, but if you have your stops here, you're very tight. Your risk to the downside as a bull is very slight. Your reward to risk ratio over the next few weeks into the next month holding a position like this would be very good. As a bear, I would use caution, because we're very likely to, at the very least, rally up into this congestion zone around $1.38. Maybe we don't get up to this $1.3915. Remember, this could be actually in a bear trend, and if it is, then we will be staying below the downward sloping resistance. So we'll see what we have to come into here. This high at $1.3915, obviously very severe. These two little resistance lines holding the trend intact. If you were a bear, these are your violation levels. These would be your first upside targets, which does give you nice room, once again, on a reward to risk basis. Let's see if we have any questions on the chat here. We have nothing on the chat here on Twitch. Let me just say hello, guys. And then also to our friends on the YouTube community here that is watching us. And hey, for all of you that are watching us right now, if you could do us a favor here, and if you're on YouTube, we got a few of you there, do us right now. I'm doing a like. I'm going to say hello to you guys too. Alright, so someone just did a like, just like I did. I appreciate that. And if you could do also a share real quick, which is what I'm doing as well. So bear with me real quick, guys. I'm going to start talking about the pound again. Okay, we just did that post and spread that out. Okay, we just want to get a little interaction with you guys, at least get a little liking, a little sharing going on. Let everyone know what we're talking about today. Alright, appreciate that. Okay, now we are back on track. Let's get back to the chart. Got our arrows here. All right, so for pound US dollar, we have a buy signal forming. Please wait until the end of the day. Now, just real quick, if you look at the hourly, just how we said it's forming, this here is also giving us a little potential confirmation. It has set this low here. It's been trending higher, making higher move highs and higher move lows. It hit this top. Looks like last hour it solidified this low here. If we can stay neutral to higher once again for the rest of the day as we trade through this session here up until, which will be September 22nd. So at 20, see this goes by 1100, but it's really not 1100. Okay, we have that for the pound US dollar. Let's go to US dollar Swiss. Now this is where we have some action. Just for transparency, just to let you know, of the currencies we're talking about, we have positions on in the U.S. dollars yen, the U.S. dollar Swiss, the pound Australian dollar, Bitcoin, Monero, Ethereum, Dogecoin. So we are long U.S. dollar Swiss from lower. We had a big sell-off yesterday and follow through today. Now, remember when we started this webinar, for those of you that were with us, we spoke about how the Euro US dollar has a very small, tight range. Even the British pound US dollar doesn't have a big range today. Look at the Swiss, what it did yesterday. It made a higher move high, sold off, settled lower below the opening of the previous day on Friday. And lots of follow through today. Our range for today, let's see, the high is 92.83, the low is 92.31. It has over a 50 pip range this morning so far in the Swiss, whereas the euro is very tight. Now the euro is one of the biggest components of the dollar index. So is the pound, and their range is tighter than the Swiss. So that tells you that the big money is watching the U.S. Fed. Now, the only thing that they're really waiting for is to just go through, to let time pass, because nobody thinks the Fed is going to all of a sudden raise interest rates. Nobody thinks they're going to really change their speak. The one thing they're probably looking to hear is the Fed recently said they're going to start to taper their buying. Maybe that changes. If that changes, that would mean that there's probably less likelihood of interest rates in the market, not from the Fed, but in the market rate, meaning like the Treasury bonds, the 10-year note, which we took a look at. It is likely that they will start to rally, because if the Fed says they're going to start buying more, meaning not tapering, meaning propping up and holding up the debt market, well, then it's very likely that you'll see a rebound to the upside for both the 30-year and the 10-year. If that's the case, if the bonds, if the interest rates start going down, meaning the pricing goes up, then the U.S. dollar crosses, such as the U.S. dollar Swiss, the euro, the pound, odds are you're going to see an extended sell-off. So we may be seeing the beginning of this, or we're seeing pressure before we get a big buy. Here's something you have to be mindful when it comes to the U.S. dollar Swiss. This market is in a bull market. It's not a big bull market, but it's been rallying. Like I said, the ranges in the Swiss outpace the euro and the pound on many days. The Swiss and the yen are flight to quality currencies. So is the dollar. Right now, with the dollar being strong, where it's kind of neutral with some of the bigger components, the bigger currencies out there, that tells you something. That tells you that we are probably in a buy dip situation when it comes to the dollar, meaning that we're going to have short-term blasts. That's why I'm saying everyone, the big money is watching out for that Fed meeting tomorrow, looking to see if there's an interest rate move. Now, if the Fed doesn't say they're going to stop tapering, if they say they're going to maintain that tapering posture and everything else, well, then I would expect the 10-year and the 30-year notes to sell off in a big way. If that happens, then expect this U.S. dollar Swiss to rally huge over the next 2 days and take out this high. So if you're an aggressive seller right now, the high from yesterday is your line in the sand. Because let me tell you something, brother. If we get above here, not only does it confirm higher move highs and that the trend is intact, well, you're totally on the wrong side of where the major momentum is. Are we going to explode to the upside? Probably not. But are we going to continue to trend to the upside? If we take out 93.34, odds are we are on our way to 94.5, 95 even in the U.S. dollar Swiss between now and the end of October. Remember how I said, October is very likely that we're going to have a major continuation of downside momentum in the U.S. equity markets. If that is the case, when the equity markets start falling, and especially as they start pressing a 10% level and 15% level and 20% level, you're going to have flight to quality. That means big money starts to run to the bond market, starts to buy bonds. Or, in this case, they may be selling it because it has to deal with the fact that the economy is so bad, We are looking at lagging numbers that are finally showing the impact and the after effect of what has gone down from the lockdowns with the economy, and we're going to actually push things. So where the dollar is, people are very bearish to dollar in the media and a lot of pundits. The problem with trying to crash the dollar right now is that there are so many things that are going against America and our economy, but also economies globally, that while you would think the dollar would be going down, it goes up in value, especially when you have the perception that interest rates are going to go higher, which I don't care who you are, you're pretty naive if you think that interest rates are going to stay at zero forever, and the fact that they can't ever go up. So it's not like saying that the sky is falling. It's going to happen eventually. So this here, do we have a sell signal? No, we don't. We made a higher move high. We're coming off that. The trend is your friend. We're looking for a buy. Like I said, we are long, so we do have a bias to the upside. Our signal came in a while ago. But let me give you some levels. Here is the 50% line here for this move. Here's a little target zone here, and then we'll move this down to here as well. And that reinforces our 50%. Okay, and now let's get rid of this. All right, so we have 92.18 down to 91.88. Very good support area, 91.78. So this becomes a really solid support band between 91.88 and 91.78. Odds are that will stay intact. We have this upward sloping trend line that we have to fail from too. You see how this comes in here? It's very likely that we will find solid support in this area here. If we were to fail from this area, that's a different story. Then we'll be leaning on 91.41. Failure from here, well then we're going to be aiming at the longer term support line, keeping the trend intact. We could just have a correction here. There's no reason why a sell-off couldn't get pressed over the next week or so and then have a big bounce higher. Odds are it's not going to happen. I think this is short-term pressure going into the Fed meeting, and that's the other reason. Since the pound and the euro are very tight today, and the US dollar Swiss is trending lower after having made that higher move high yesterday, that tells me that this is just an overzealous trade. Some of your lesser currencies, now this Swiss is still a major currency, but nothing in volume and size compared to the other two that we've looked at. So these are more in flux. So these will be more overdone. So while these trend and the other ones aren't moving, once the trend stops in these, that's when it's going to snap in the others, especially if they go counterintuitive. So if you see, for instance, between now and 1:15 tomorrow, an explosive rally in the euro US dollar and the pound US, and then see the pound US dollar fall apart, well, odds are the US dollar Swiss will be making new highs above 93.5 in a heartbeat. So use caution. If you're a bear, you have your risk level here. Anything above this area, I'm telling you, it's not just, it's obvious that it's making new highs. You're looking at a situation where it can really explode to the upside. So be mindful of these levels. Now let's look at the US dollar, Japanese yen. This is another one that we're long too. This one's been talk about a chop fest. This thing is just grinding, Now it has over the past week and a half been making lower move lows and lower move highs, but we're looking at these key lows that come in right around here. You can see this is a big support area. We have this barely penetrated here. So this area of 109.04 seems to be a big base. I think that you're really, if you're an aggressive bull, you can get long this market using this 108.72 as your risk level. Everything above here keeps this market in a sideways to higher trade. Overall, we're looking for this market to pop out of this current slump and then start to trend higher once again. We're viewing this as having been a correction over the past couple months, which is based, and now we're looking for a breakout to the upside. Main reason being is from all kinds of economic and other trends that are going on in the market. Overall, the US dollar, Japanese yen is still in a bull market. Has been for over a year. We're looking for this to continue. This seems to be, in our outlook, just a pause for the cause. So we'll see how the things go with the Fed meeting. We do not have a signal here. If you're an aggressive bull, buy against this 109.04 or 108.72 area for your risk. Anything below here, well, obviously you're grinding support and the bears are in control. As far as selling into this area right now, I would use caution just because you're in the bottom area of a range trade where unless we do seriously fall, if the floor does open up and fall through here, you're going to just bobble around here and churn back up towards this 110.45. So your risk-reward ratio to the downside versus the upside is not as good as it is being a bull. All right, so that is that. We have no questions on the chat. You guys are quiet. We got a couple more likes and shares like that. Thank you very much. Keep it up, guys. All right, Australian dollar, US dollar. This one is continuing lower, and this is where we get this mixed bag of goods. The other markets, major markets that we've looked at so far have been going more sideways. This one's been trending lower for a while. It had a nice upside correction. It has resumed the downward trend, and we are looking for this thing to continue to do so. The only thing that would give us a short-term lift in Australian dollar, US dollar would be if we had between now and tomorrow, the Fed saying that they were going to stop the tapering thought and start buying again. That it would only give a short-term lift. The major thing with the Australian dollar, US dollar, is it is a major bear due to what's going on there. The lockdowns are no joke in Australia, folks, and they're getting more severe. My prediction is if the way things are going, that the Australian dollar, US dollar will remain in this bear trend for every bit of the next 6 to 12 months. There's no reason right now to even expect or think that anything is going to change. So any currency cross with the Australian dollar, for the most part, it is a bear for the Australian dollar as far as that component of whatever cross you're talking about. So especially when you look at, like, for instance, like the pound Australian dollar and a couple other ones, it's US dollar or Australian dollar, US dollar just as well. This is a situation where Australian dollar is in a bear market. Look for rallies to sell. I would use caution selling into this level. If you want to get into a trade, I would wait for a signal. If anything, I would look for a rally to sell. But yeah, overall, long term, we are looking for this market to continue lower and lower and lower and lower. So we don't see any glimmer of hope for this market in sight for a long time. However, for you bulls out there, since we did make this lower move low and this higher move high, neutralizing the trade, key off the 74.82 level. You have to get above here to confirm strength. That takes out this downward sloping resistance line, keeping the trend channel intact. Sorry, a little tongue twister there. And obviously a breach of this level would mean higher move highs after a higher move low, and then short-term trend change confirmation. But these things need to occur first. Otherwise, like I said, we are bearish this market for no end in sight. New Zealand dollar, US dollar, not quite the same situation. We are still bearish this one overall, but this one is a more neutral trade. So we still see this market selling off over the next few weeks. Is it going to take out this last lower move low down here? Probably not. This lower move low followed by this higher move high has probably set the range and tone for this market for the next, I would say, 3 to 5 months. 6 months is pushing it, but I think definitely as we head through the end of the year into January until February, this market could be contained within this area. Odds are we will be chopping more in this zone right here. Let's see, we go from here down to here. So this area here is probably our hot zone for the next few months at least. I would expect a lot of trading between here, not much down here, not much up here. And you definitely need a breach of this level to confirm any long-term, medium-term strength. Otherwise, we're looking for a lot of tough trading action going on here. So wait for either a buy signal to look for another challenge of resistance, or wait for a rally to sell into with a valid signal to look for another drop down on support. So what we're saying here Not a lot of follow-through expected with the New Zealand dollar, US dollar. You may use that as a weapon for your trading, because if there's no, remember, you trade currencies because they trend a lot. Most markets only trend 30% of the time at best. 70% of the time they're going sideways and going nowhere. Currencies, on the other hand, for the most part, especially your major currencies, will trend 70% of the time, and 30% of the time they're neutral. I mean, a lot of times it doesn't look like that, but the reality is there is an overall major trend that is usually intact in the currencies, especially when you start looking at the monthly charts and the weekly charts. Then you're like, yeah, there's always a lot of action in the currencies. All right, US dollar Canada. Here's another reason why we're calling on this rejection of dollar bears that's out there. US dollar Canada has every reason to be correcting back to the downside. Maybe it will, maybe it won't. But as long as this is positive right here, odds are the other major currencies are not going to sell off very much versus, meaning the dollar is not going to sell off versus other major currencies. We have a potential head and shoulder forming here. So we have our shoulder confirmed here. We have our head over here. And then we have what may be a shoulder forming right now. So the question is will the bulls maintain their posture, or are we going to fail? So use the high of the head as your line in the sand. If we get above this area at 129.53, well, that's very bullish to dollar Canada for sure. That means that this, what has been viewed as an upside correction, is no longer an upside correction but a complete trend change. I, however, think you're going to run out of gas on this one. We'll see. It's a big question mark. Oh, you know what? We can't put this as a defined shoulder because it hasn't turned around yet. Okay, so is it a shoulder? That's a question. There's the, oops. All right. There we go. Is that a shoulder? Let's make that a little clearer. Put a space here between the S. All right. There we go. All right, so now you see that. So key off of this area here. If you are an aggressive bearer, you could say short the US dollar Canada here against this 29.5 level. Once again, above here, you are on the wrong side. However, if this is going to be a head and shoulders, odds are we are running out of gas somewhere in this area that we're in right now, and we should be looking for a turn back to support. So another thing to do is to watch the trend of this current slope. All right, so there we go. So we'll see what's happening with the US dollar Canada. Got to wait for the trade. We have an aggressive sell posture right here that you can jump into. Low risk, especially because even if you just come back down into the range that we've been in for the past month and a half, you have a good reward to risk ratio where you should make 2.5 to upwards of 4 times what you would on your risk. So at least you have an opportunity to put on a trade like that, but we don't want to second guess things either. What the major thing that you need to really follow through is, here's your neckline here between this and this. So this one here will be your key level. If this neckline here, if that fails, well, then we're looking for a major sell-off, and that would also probably mean that this was just an upside correction, and we could have a longer-term sell-off that challenges the lows that were set back in the beginning of the summer on June 1st. That is correct. You may have your last best selling opportunity coming up now over the next couple of days for the US dollar Canada for a trade that may last upwards of, could be anywhere upwards of 3 to 4 months, maybe even 5 months. Nice potential selling opportunity there for you. But then it also could be, we could be right in the middle of a major wave north. So we'll see. I believe we're definitely going to go south, but that's my opinion. All right, now we're going to get to the cryptocurrencies. Thanks for hanging on as long as you have, guys. I know that some of you are crypto fans. You're like, how come you don't start out with that? Well, that's just how it goes. BTC USD coming off that big high set a couple weeks ago, and today making a lower move low. Isn't it interesting how the stock market gets fucking pounded yesterday, and this does too? So very interesting as far as where is big money and what do they look to do. So short term, we always use the Bitcoin as our dollar index relationship for the cryptocurrency markets. This one is looking to go lower. It's made a lower move high and it's made a lower move low. We have confirmed a break in trend. We are at the very least neutral. So yeah, we're looking for this market to be under pressure for at least the next couple of weeks. Could it snap back? Obviously, yes, it could. I would say that as long as we stay below here at 48,939, we're going to be in a suppressed neutral to lower trade. A rally above here, however, confirms some serious strength in the crypto market, setting us up for a rally that targets around 65 to 70,000. That's right. We could really, really sling this market up and bring us to an area that lifts the whole cryptocurrency market. So for you currency market bulls out there, you're not far away from a very key breakout level. As far as for you cryptocurrency bears, yeah, we're right now in the middle of a correction. How far can we go? Well, we had a violent setup. Now here's the thing that worries me. You made a higher move high and then a lower move low all in one day. The other thing that scares me is that from this last move higher that set this rally intact, we fell right into the 50% to 0.618 Fibonacci band. So this is huge. So we fell on huge support today. It's big that we hold this area. Any trading below this range here has this market in jeopardy for a while and under a lot of pressure. That's something I would think about too, is if these lockdowns start to spread and get severe across the globe. Asia, it's no joke. Singapore's locked down, Australia's locked down, all across Central Asia and Southeast Asia. There's all kinds of problems with that. This is a big deal, and if it continues to spread over the next couple of months and we start to close down in industrialized countries like the EU and the United States, Bitcoin will probably also drop off the map too. It will have a nice correction. Does that mean it's another buying opportunity? Probably. I don't think Bitcoin's going away anytime soon. I would just be leery of buying into the area where we're at right now. If you haven't taken profit already, you're probably still in a good area to take profit on any type of rally. If you are looking to buy, I would say give yourself a little bit more time. All right, ETH USD. So following the way of Bitcoin, this is doing the same thing. However, today you can see we've set a lower move low and we are positive on the day. I think that this one has less chance of as much volatility as Bitcoin does moving forward. The nice thing is the adaptability of the Ethereum network and all the other tokens rather, that are now functioning and helping to create all kinds of services that that's what the whole industry is set up for and meant to do. So this one here, we're looking to stabilize. We could see still some lower move lows, but we're not looking for any major sell-off here at all. All right, now let's look at the Doge USD. This one here is setting up a little harami buy, and this will be interesting. Could Doge be the one that sets the signal for the cryptocurrency markets? If this market settles if it looks like this when it settles today and then starts to rally again tomorrow, we have a harami buy and the potential for a three inside up buy signal setting up with tomorrow with a follow-through rally. If we do that and we settle like this today and then get a rally and settle higher tomorrow, then I would say the Doge has a good chance of getting back up to this 26 to 28 cent level. We are not bullish this market. We are just looking for a potential upside correction with the Doge USD. Now let's look at the XMR US dollar. Monero, here we go. Monero US dollar, also looking like Bitcoin, also looking like Ethereum for the most part. We think this one here is finding good support. Anywhere between 180 and 220, we think this is a solid buy no matter what's going on in the cryptocurrency markets, even if they're in a suppressed market in a bear trend with the other ones, especially Bitcoin. XMR US dollar, we really find a solid base here from 180 to 220. We tagged the 220 today. So I would say let's look for another stabilization of the trade. Probably going to be sideways from 220 up to 280 for the next couple of sessions. Should we dip down to lower? Like I said, I find huge support in this 180 to 220 area. very good buy zone. I think long term with the technology and the use of what it can be, buying it in this 200 level is very good because you have the really good shot at it going back up to 300, between 280 and 300. So it's a good range trade here. Anytime it gets in between 180 and 200, it's a buy zone looking for a rally up to the 280, 300 level. Profit taking zone, and that's pretty much the way I think you're going to see those currencies going. Euro, US dollar, let's go back and see. Look at how this is just, it's unchanged on the day. Very small volume. Once again, the high is 1748. Yeah, we have a 30 pip range. Remember we had over a 50 pip range in the Swiss that we were looking at. Stay away, my friends. The markets are quiet. It's Fed day. There is not a signal in sight. We gave you some potentials where you have low risk, high reward potentials on some trades, but we don't have any valid signals yet. So since we don't have any valid signals, don't be chasing things, trying to set things in motion. Don't try and predict the market. Wait for a signal and then follow and execute the proper trading strategy. And that's all we have to say for you guys today, except for do one last thing for us. If you could, if you have not done so already, please make sure that you subscribe to our channel, Forex Trading Unlocked, on YouTube or Twitch. Make sure you like our videos and share them with your friends and out with your trading community, and we would appreciate that. And check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Soon to be released in hardcover. We're working on it. It's a new service offered through the publishers at Amazon, so we have to resubmit it, and it's going to take a couple months, but we're not rewriting the book. We're just making it look a little nicer, and it'll be a hardcover version. And yes, it will be more expensive because it's an expensive book to sell. One of the reasons our book is actually underpriced. We don't make much on the printing of it. Because it is all color on the inside. Most financial textbooks use all black and white. We use color, a lot of good graphics, and it helps to really highlight and make things jump out at you. You get something you do not get from other offers and other financial writers out there. So thank you very much. Make sure you go to www.forex-trading-unlocked.com for all your